the common size statement, that is common size profit and loss statement. And how common size this statement actually we make for interpret what is the position of our company. So this is the revenue from operation, other income, cost of material consumed, finance cost, other expense and income tax is there. Okay. So just write this here, this example you cannot find your book, you just write it. I am waiting for 1 or 2 minutes. After that we start to solve that. Just write it. If any problem you can ask me. Revenue from operation 25 lakh and 20 lakh, other income 1 lakh and 1 lakh, cost of material consumed 17 lakh, 14 lakh, finance cost 2 lakh and 1 lakh 60,000, other expenses 1 lakh and 1 lakh 40,000, income tax 50% and 50%. Now how can we solve this problem, this common size statement? Hope you have, everybody have written. Now write common size profit and loss statement, profit and loss statement for the year ended, 31st March 2017 and 2018. Okay. Now first there is a particulars, then here one thing, the main change, main difference for comparative statement, there we each and every item we compare, but here we set a base. Suppose in profit and loss statement, what will be the base? Revenue from operation will be the base. Okay, means sales will be the base for here. So we take the sales as a 100%. Okay. Now welcome back again. So, in common size statement, main difference is we will set a base. Here base is revenue from operation. Okay, here base is revenue from operation. So, from revenue from operation, we compare all the items, that is cost of material consumed, other expenses, finance cost, all we compare with revenue from on the viewpoint of revenue from operation. So, here revenue from operation will set is a 100%. Okay. In the case of balance sheet, total asset will be the base and total liability will be the base. In the total asset, what will be the fixed asset? What will be the non-current asset? What will be the what will be the your current asset? In case of liability, total liability will be your base. In the total liability, what will be the shareholder funds? What will be non-current liability? What will be your current liability? That's all you figure out. Not the horizontal analysis, just like comparative. In comparative, what we actually done? We done if there is a cost of material consumed, then what is the material consumed of 17-18 and 18-19? Okay, both the figure we are comparing, and as there is no need to figure out any absolute change, any difference from previous to this year. Only difference we can take here is change in percentage. What is the percentage in the base of revenue? Okay, in the case of profit and loss account, we set the base revenue from operation. So, first write revenue from operation. Revenue from operation. And we know the last year figure should write first, then current year figure. Okay, always do that. Previous year figures write first, then current year figure. What is going on? No, network, due to network problem, Akash has left out. Now, Akash, do you have a network problem? Each and every time the connection was lost, you have a network problem. Now, revenue from operation is our base, and through revenue operation we compare all other items. So, what is the revenue from operation is here? 20 lakh, first 2016-17, 20 lakh and 25 lakh. These are the absolute figure first right. Then, and whatever the percentage is here, both the percentage is 100 because that is the base. Both the percentage is 100 because that is the base. Now, number 2 is other income, and that is number 1. Number 2 is other income. And what is the absolute figure? 1 lakh and 1 lakh. And we have to compare this 1 lakh, what is the percentage of other income in the base of revenue from operation, on the basis of revenue from operation. So, what will be the percentage? Just 1 lakh divided by 20 lakh into 100. Okay, 1 lakh divided by 20 lakh into 100. What will be the figure? That is 5. So, dash percentage you have to write here. Dash percentage you have to write here. And same thing you have to do for next year. That is 1 lakh divided by 25 lakh into 100. And what will be the figure? What is the percentage? 4. It means other income percentage, it is 5% of other income as of net sale. Okay, 5% other income is there in the 2016-17 and 4% other income is there in 2017-18 as of revenue from operation. Okay. Now, total it, that is 21 lakh, that is 26 lakh, and that is 105, and that is 104. And that is the total income. Total income. This is number 3. Now come to the side of expenses. Number 4. Less expenses will be less from income. Less expenses. What will be the expenses? That is, first is cost of material consumed. Cost of material consumed. What is the figure? Sorry, cost of material consumed. What is the figure? Now figure is 14 lakh for 2016-17 and 17 lakh for 2017-18. 14 lakh and 17 lakh. And again, you do not need to any absolute change. You have to compare this figure from which figure? That is net sale, means revenue from operation. Okay. So what is the percentage of cost of material consumed? 14 lakh divided by 20 lakh into 100. What will be the percentage? Percentage will be the 70%. And for next year, means current year, 17 lakh divided by 25 lakh. So what is the percentage of cost of material consumed in view of revenue from operation? That is 68%. Now next is finance cost. Next is finance cost. Finance cost, what is the figure? There is a 1,60,000 and 2 lakh. 1,60,000 and 2 lakh. Now what, again you have to do the same thing, that is, what is the percentage against revenue from operation? What is finance cost percentage? 1,60,000 divided by 20 lakh into 100. What will be the percentage come? The percentage will be 8%. Okay. So that is 8%. And for next year, again you have to do the same thing. What is the percentage of finance cost against revenue from operation? That is also 8%. Now other expenses. Now what is the absolute figure of other expenses? 1,40,000 and 1 lakh. 1,40,000 and 1 lakh. Now again you do the same thing. What is the other expenses percentage against revenue from operation? Now 1,40,000 divided by 20 lakh into 100, that is 7%. And for next year, 1 lakh divided by 25 lakh into 100% means 4%. Okay. Now again you have to add this. What will be the total for the 2016-17? That is 17 lakh is total expenses. For the next year, that is current year 2017-18, that is 20 lakh. And you have just sum these. There is no horizontal analysis. Don't make any difference or any percentage to horizontal. All will be done in vertical wise. Okay, so what is it? 70 plus 7, 77 plus 8, what will be 85, and that will be the 80. So that is the total expenses. Now number 5, profit before tax. Now profit before tax how will come? From your total income you have to less your total expenses. Okay, this is your total expenses. Total expenses, and you just mark it total expenses from total income. You have to less total expenses. That is 3 minus 4. So 21 lakh minus 17 lakh. What will become? That is 4 lakh. And here again also total income is 26 lakh and total expense is 20 lakh. So what will be the difference? It is 6 lakh difference is there. And here also we cannot do any horizontal analysis. You should do the vertical analysis. So 105 is total income percentage and 85 is total expenses percentage against sale. So what will be the difference? The difference will be the 20, and here difference will be the 24. Okay, 104 minus 80, that is 24. Now number 6, less tax. Both their tax is at the rate of 50%. So though if this is a 50% rate, then 4 lakh means it is 50% tax is there, that is 2 lakh, and 6 lakh, that is 3 lakh. 4 lakhs 50% is 2 lakh, 6 lakhs 50% is 3 lakh. That will be the tax amount. And here also the same thing will be happen, because if this is a half, then percentage will also be half, 10% and 12%. Then what will come? That is 3 lakh. That is 2 lakh. And that is 10% and that is 12%. So net profit number 7 is what we get? Net profit after tax. Net profit after tax. Okay. Now from this statement you just do the percentage wise change, what is change actually happened. Now you have to interpret. This is the main important part of this common size statement. Okay, in comparative statement may also we have to interpret the things. But how can we interpret? Now you just see from the problem here, cost of material consumed has reduced by 2%. Cost of material consumed. Here this is a cost of material consumed reduced by 2% against sales. Okay. Though the sale is increases, but material cost is decreases. Is it good? Yes, it is good, because we are consuming less material but output will be more. So this is a called efficiency. Okay. 2016-17, that is 70%, but in the viewpoint of if the basis of net sales or revenue from operations, next year 68%, means current year we consume only 68% of material consumed. Okay. So this is actually due to reduction of cost. This means it is a reduction of cost and it is helpful, it is increase the profit of the business. As you can see, the net profit is increases in next year by 2%. That is previous year, that is a 10% net profit was there, and this year that is 2%, means 12%, means 2% there is an increase of profit in this year. And total expenses have decreased from, recording is going on, and total expenses have decreased from 85% to 80%. Total expenses have decreased from 85, that is total expenses, means this total figure, cost of material, finance cost and other expense, that's all are total figure. That is total expenses is decreased from 85 to 80%. There is a 5% decrease of total expenses, and that expenses increase, that as the expenses will be decreased, as so reduction will be cost is there and your profit will be increased. That's how there is a, you can see easily, net profit before tax. There is a net profit before tax. Profit before tax, there is a 80%. There is a 5%. Sorry, there is a 4% increase in net profit before tax. Okay, this is 20 and this is 24, means this is a increase of 4% of net profit before tax. So that's way you have to interpret the total common size statement. One of the thing also, it may be concluded that company has worked efficiently. As the profit is increases, last year this is a 10% net profit, this year 12%. As the cost is reduction, because material cost last year was 70%, but this year is 68%. So there is also a, you can say the company is day by day efficiently and effectively they are increasing their sales also, and they are doing their business well. Okay. So for today, that's all. Hope you understand. If there is some technical problem for your end and our end also, so you just look the video from YouTube, which will be uploaded very soon, and you just go through the video of YouTube also, because these things will be uploaded in your YouTube channel, our school YouTube channel. So thank you for today. Hope you are well and safe in your home.